Alright guys, good afternoon. Welcome to the mentor session. I'm aware someone asked a question this morning, so I will have a look at that and see if I can answer that next week. So thank you very much for that. What I want to do today was have a little look at one time framing, because this I talked about on Monday in the BUND, and it goes to explain part of how yesterday's drop, or how and why yesterday's drop materialized in the way that it did. So what is it? It's a sequence of days or time periods. So this could be on an hourly, on a 5 minute, on a 1 minute, any time period where if you're one time framing up, you don't get a break of the previous candle's low. So you'll have candlesticks that effectively move higher like this. You never break the previous candle's low, rather than a move that may well develop more like this. So you're still getting a trend higher, but you'll end up with candlesticks that will break back, giving you the pullbacks. So you get a different type of movement. So that's what you're looking for. So reasonably easy to identify. I think often it can actually be easier to identify on a profile because it gives you the sort of each section of the move up. So particularly on a daily, this is more pertinent. What's it suggesting? Well, the main suggestion is that everyone's looking in the same direction because no one's even trying to sell. There's no pullback in any of the movement. So everyone's in the same direction. Everyone's looking for the same thing. And what that also means is that people are now having to buy at worse and worse prices. If you're waiting for a pullback and you're not getting it, well, you're then effectively forced to buy higher prices. So let's say originally you wanted to buy down here. You're not getting any kind of pullback towards it. So even if we say break a level, you don't get a pullback towards the level to buy here. I mean, if you still want to be in this move, you're now paying higher prices compared to where you'd ideally want. And this has an impact on people's positioning, and that's the really important bit with a one time framing move. These types of moves are slightly more indicative of shorter time frame participants, that there are no larger participants trading counter the move, that people are more sort of emotionally driven to dive into a trade. And you know, everyone's felt this, even on a short time frame, where you start to see a move developing and you feel, I need to get in, I need to get in, I need to get in. And you start to then chase. So there's typically shorter time frame traders, and the way to read that is weaker. Now, this isn't to cast aspersions against anyone, but if you're a smaller time frame trader, you are essentially a weaker trader in the sense that, as many of you will know, if a move starts going against you, you're not going to hang around and try and buy more to hold that up. You're going to get out. That's what makes you a weaker position. So what that also means is, particularly now, not only have you got a move predominantly led by shorter term traders, you've also got people getting in progressively higher prices. And so therefore, it's not going to take much for people to start exiting. And when you think about where the trade is on this, this becomes even more apparent. That the first way of playing a one time framing move is it's less that you take the trade thinking it's going to be a one time framing move, and more that you take a trade and then as the move develops, you can then put your stop below the previous candle, so giving you a chance to trail a stop. Meaning that on the first sign of a turn, you will get out, and there'll be others joining in this. I'll show you an example of this in a moment in oil. But what it also does is it creates an opportunity for a reversal trade. Because you know that people have got themselves positioned one way, and a majority of people are all looking in the same direction, no one's looking behind them. And once some people start getting stopped out, this then leads to more and more and more and more. And this is what then creates a move that will one time frame up followed by a single move all the way back down as people get stopped, 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 stopped. Now, of course, it doesn't have to take the whole lot out, as we saw with BUND yesterday, but typically you'll see a proportion of it taken away. So here's an example of a short-term one, and actually giving you the opportunity to play with the one time framing move. You will often get these on a short time frame, so this is a 5 minute, on a reversal. Because what's happening, and this is oil a few days ago, where we broke trend, we got down towards these bad lows that I talked about previously, down at 41.77, and we failed to break. So you could have an entry as you come back above 77. You see that failure to break, you get long. After that, every single candle up until here doesn't break the previous candle's low. So it takes you the entirety of the move back. And what you could do is continually move your stop up below the low of the previous candle, maintaining your position. And what will typically happen, because moves will often end with a slowing down of action, particularly a reversal move, because this is created by people rushing for the exits early and then steadier move higher. By one time framing or trailing a stop on a one time framing basis, you'll be able to get out pretty close to the high, as illustrated just there. So that's one way to take the trade on from a short time frame basis. Equally, don't lose sight of, there we go, we'll move, the bigger picture. And this is on a daily, and this is the recent, I say, move up at the end of July. Once you got that significant breakout and the general dollar weakening play that we saw end of July into the beginning of August. Euro and gold. Once they broke recent highs, you then got once again this one time framing move, which results in this very, very straight line move higher. Now the euro doesn't really back off. Gold does break the one time framing here, very briefly. From a daily perspective, then does keep on going. What you need to be thinking about here is how these moves end, or how these moves end. Do they end with a liquidation of positioning as people start to rush for the exit, or does this initial reversal, so the beginning of the end of the one time framing, if you will, does that fall and find support? If it finds support, you can just end up with a continuation higher, as we saw with the euro. Whereas with gold, what we got is, after having that first drop, once that support breaks, then you get the flush out, which is this large move that we saw a week or two ago in gold. Massive 1400 tick drop. One of the biggest days that we've ever seen in gold, incidentally. So it's not just about assuming that every one time framing move ends with a massive liquidation. It's about recognizing the tip that will say, yes, this liquidation is on. So let's go and have a little look at the BUND one. What we've seen, and I've seen this pattern before in BUND, where you've actually got a one time framing move from here. The low of the high of each day, drop, there's the high, and the high, continually moves lower. And then we have this steady reversal move back up. Essentially a pullback within range, giving you an inside week. But this provides a steep uptrend and a one time framing move higher. But unlike this move down, there's no aggression in this. All of the moves up, take this move here, they're not able to really sort of drive higher. There's sort of initial push and then it runs out of energy. Whereas this move down, much, much more aggressive drop, pullback, drop, pullback, drop, pullback. Much more initiative in the move. So what this is showing you is people are getting themselves long playing a bounce. and playing a rather steep bounce. This could, as we saw on Monday, end the one time framing, which it does here, find an area of support around about 72, bounce back, and that will be the end of move. But if this area of support goes, now you start looking down towards the next lows, which come in down towards initially 72, the break, then you're looking down towards 46 and 39, then all the way down towards 05, and potential to keep the move going. Now, of course, you don't know which low it's going to get to, but each of these become a target on that move down. So if we bring this onto a shorter time frame, this is what we have. This is your drop. This is the end of the one time framing here. You end up with a weak close, just breaks the low, so that ends the one time framing, and that could be it. But where your big clue comes is the next day. When you have this situation whereby from the open we trade back to the close, then push straight below these 72s, there's your first clue. The key bit here though is where your acceleration is going to come. These two lows at 46 and 39, there and there, is your acceleration point. This is where anyone who's been buying this up and then most people are offside now. The people who bought it on the last 3 days, certainly. People who bought it earlier are starting to get to a point where they're seeing more than a 50% pullback of the move, which is also going to bring in people taking their profits on these trades. So anyone using that trailing stop method is starting to get forced out, which is what creates this acceleration and this faster move down, which takes you all the way down through those 05, 02 area, down towards VPOC, previous high, previous single prints, giving you a decent target. But that's not to say this is the definitive target. We could well have gone and taken these recent lows out, which is still a potential, perhaps today, perhaps in the coming days. We've not looked like we're going to do this today now, because what we've managed to do so far is trade lower and back up and traded like this. Consolidation, but still sets up the possibility of a further continuation. In terms of where you could actually access this trade, the big clue comes here. You get a surge straight on the cash open, or sorry, just out past the cash open, whoops. Just past the cash open, surge down, delta up, volume up, drives out of the IB, retest of the IB at 67, there's your chance. That's your clue that this is looking like a reversal of the one time framing. Here's that little range, 46 to 39. Once that goes, that's where the more accelerated move comes from, giving you this steady move all the way down towards those previous lows around about 05. That was the bit that ultimately pretty much one time framed all the way down here by this minor pullback, which was your chance to sort of get in on the pullback to the level, virtually one time framed all the way down. So that's what I'm talking about when I say a one time framing move. It's a move that's had no pullback, and so it is vulnerable to a reversal, vulnerable to people running for the exits because of the fact that they aren't able to really manage their risk. Yeah, the risk is the previous candle's lows. Once that starts happening, you get this cascade of people exiting positions. So something to think about next time you see these one time framing type moves. You can't call the top or the bottom, but what you can do is recognize when the reversal has started.